Some of the things that we look at. So when we were talking, when Alexis was talking, she was bringing up a couple of the stats that we see. And so we don't get any of the June stats until the end of the month. So we're working with what we have from May. And a couple of the big points and factors that we're looking at is, number one right here is the month of May, we saw an increase of 4.1% in active listings that came to the market. So 3,585 listings came onto the market, and we saw a 6% decrease in sales. When we're talking about, people always talk about buyer's market, seller's market, balanced market, all those things come into equation, all those things come into effect. The way that we find out what the difference between what market we're currently sitting is, we take a look at our sales, so 1979, and we divide that by our current inventory. If it is greater than 20%, then we're in the seller's market. So we're about 35%. So technically we're still in a seller's market. I think it was 32%, right around that range. We're currently in a seller's market. So we've seen that growth. We've seen us move from, a predominantly buyer's market for the last little bit into a balance. And then during COVID and everything, we moved into more of a seller's market. So those are some of the big indicators that we've been looking at and that we've been focusing on. So we move over to this page. So this is our residential stats and our home price index. So a couple of things that we're taking a look at here is we can see this massive spike. So from December 2021, as we push into January, February, March, we just see that curve. It's upward on that trajectory until we hit into May of 2022. And that's where we start to just level off and we're starting to plateau a little bit. So as we see, Edmonton's a very, very seasonal market. School just ended. Families are going to go on vacation and all that stuff is happening right now. And so what we're going to be seeing is we're probably going to see in June, the market continue to increase. Activity of things that are happening, more houses hit the market, but we're going to see things slow down. We're probably going to see sales drop a little bit. So that's taking a look at that micro Edmonton market. But as investors, obviously we want to take a look at the news. We want to read stories and see what's happening. So let's look at some of the stats, some of the things that are happening when we Google Canadian real estate. And one of the big factors and things that we're seeing right now is Canadian home prices expected to drop by 19%. I mean, that's crazy news. People freak out about news stats like that. So what do we do to look past that? So a couple of things that we're going to look at is, obviously, if we're taking a national approach to the statistics, we have our two big markets. One, what Alexis just talked about with Vancouver, and then we have our market, Toronto. And with those two markets, that really skews a lot of the statistics that we see on a national level. So getting into a little bit more of a specific, getting more micro into the stats that we're looking at is super important. And obviously with Vancouver and Toronto, prices have been rising for such a long period of time. Edmonton was either dropping or we stayed pretty steady with 1 to 2% increases and decreases. Vancouver has been just like upward, upward, upward. So when they drop a lot harder than we do. And we're kind of just like going along for the ride, just putzing along. So then we got to look at some of the things. Are we going to be affected by, these stats, 19% drop? Or I read another news article where it said 1 in 4 Canadians will not be able to afford their mortgage coming down in the next 2 to 3 years. So one of the big things that we're going to be looking at is the Affordability Index. So this stuff is amazing stats, amazing information. So this one is brought by the National Bank of Canada. and it pulls and highlights different markets within Canada. So taking a look at, we'll use Vancouver as an example, and this is May 25th, 2022. So this is pretty up to date data. So let's take a look at Vancouver. So what they're calling a non-condo, so basically houses, single family type units, average price in this representative is 1.66 million. That's crazy. So your household income, in order to afford a property at that price, they're saying that's 285,000. And then they talk about savings. So if you were to save at a 10% rate, how many months would it take you to save enough to purchase a house here? So 452 months. And then we look at two other things here. So mortgage payment as a percent of our income. So 101%. I don't even know how that works. So you got to spend more on your mortgage payment than you do than the income that you have. That is unbelievable. It's crazy. And then the premium that you're buying compared to the national urban composite, so 68.8%. So let's go down to Edmonton and let's take a look at what we're seeing there. But as I scroll down, some of the big things that we're talking about and what things that we're seeing being agents in Edmonton and servicing, having a lot of clients across Canada, not only are we looking at investors coming into Edmonton, but we're seeing a lot of people move into Edmonton, move to Alberta because of a way of life. They want that lifestyle. And you look here at mortgage, at the MPPI, or the mortgage payment as percentage of income, and it's only 27.5%, which is crazy compared to Vancouver and Toronto and some of the other markets. Looking at our median price or our average price here, 445,000 for a property, and you only needed income, or the income that you need to sustain that is 90,800. So a big gap, big change from the 250,000 plus that you need for the Vancouver market, and that's the big reason, big shift, is that affordability that we're seeing come from people migrating into Alberta. Another interesting thing here too is Edmonton remained the second least expensive Canadian city to buy a house, only surpassed by Quebec City, and was still the least expensive city in which to buy a condo. So Edmonton's condo market, we all know, any investors who own condos, it's really been taking a hit over the last 5-10 years. And now we have a new record. We're the cheapest condo market in all of Canada, which is exciting if you're a buyer, not so much if you're a current owner or seller. So lots of opportunities in that market. So obviously we take a look at these sort of things, and what does that mean for us? How can we forecast for the future? So a couple other ways of doing that is taking a look at our GDP growth and some of the employment stuff. So here's, this is from TD. This was just updated, I think, about eight days ago. And so we have our 2022 forecast for the remainder of the year, and then what our 2023 forecast is as well. And so if we take a look at Alberta, for 2022, we have a 5.5%, and then for 2023, 2.8%. So if you take a look and just do a quick glance compared to every other province in Canada, Alberta is supposed to be leading for the next year and a half GDP growth. So when you take a look at what's going to be happening with the housing market, take a look at, I would say, our two economic indicators, which are GDP growth and migration. So you want to see people moving into the province, and you want to see GDP increasing. Those two factors, typically we see a positive or a negative, depending on those two factors, increase the housing market between 12 and 18 months. So just to recap everything, Edmonton, don't get scared by all the big headlines you see. Dive in, read beyond just the headlines. Take a look at the data. Take a look at what's happening. If you're a buyer, lots of opportunity in the Edmonton market still. You have more time. There's more opportunities. There's more houses to shop for, but you can't get greedy. Good deals will go fast. We still have multiple offers. If you're a seller, don't look at the last 3 months. That data is now out to date. Unfortunately, you did miss the opportunity to sell your house in a crazy upswing market. And now we have to look at stats and data from 3 months, 6 months, 12, 18 months from now. You want to be in the top 3% of the housing. So when you're looking at comparables to put your house on the market, my advice, take a look at active listings and take a look at pending listings. Why did those ones go pending in comparison to the active ones? And don't get greedy with your list price. Don't chase the downward market. Get ahead of it. Sell before everyone else, because as soon as those people do a price drop, now you're that overpriced listing and you're playing that who's got the better price. So that's my market update for June.